Again, there have been looming concerns about a global recession for a while, and this has in some way guided some companies, as the Fed has raised loan rates multiple times in the previous year. Gary Black, managing partner of Future Funds, has provided some respite to investors, stating that there will not be a slump and that if one does occur, it will be extremely brief. Welcome back to the Tesla hype, everyone. Elon Musk, the CEO of Tesla, stated to analysts in 2025 that he thought inflation was higher than it was then, and would probably stay that way. Prior to this, Musk stated at Tesla's annual shareholder meeting in August that the economy had recovered from its worst inflationary period, and that most of the components and goods used in Tesla's cars will soon become less expensive. Musk claims that at the time, the trend was downward, indicating that the economy had passed its peak inflation. The CEO of Tesla also stated that it will fall rapidly, and that he only anticipated a slight decline over the course of the following year and a half. Additionally, Musk stated that he anticipates a flattening of input costs, which will result in improved profits, even if the downturn is severe. Will Tesla experience a decline this year? There are more specifics in this video. But before we get started, please remember to like, subscribe, and ring the notification bell if you enjoy this kind of content, so you can keep informed about everything Tesla. Black claims that Tesla's latest price reductions have been successful, and that investors are not paying attention to Musk's economic predictions. He went on to say that most people are not worried about if there will be a slowdown, and that many people think Tesla might produce up to 450,000 cars in the first quarter, with a 1.9 million vehicle delivery volume for the year. Gary Black set his projected margin for Tesla at about 23%. Additionally, he projected that within 6 to 12 months, the price of Tesla stock might reach $370. Black acts on his convictions and has a new price objective for Tesla based on his unusually high level of stock optimism. Recently, the Tesla investor shared his thoughts on why the company's stock is so cheap. In a recent interview, the former asset manager stated that when the market leader lowers prices, they typically have more leeway to do so than rivals due to their bigger net margin. He went on to say that Tesla, like the majority of industry leaders, will win this pricing war when they lower their prices. The competition doesn't really concern him. He claims that although there have been rumors of growing competition for Tesla for years, it hasn't had a significant impact on the company. Additionally, he stated that he anticipates a significant surge in sales for the carmaker in the first quarter, as the EV manufacturer regains volume as a result of two price reductions. Black had previously listed a number of reasons why he thinks Tesla stock will rise significantly in the future. A rise in Tesla's output, according to the company's bull, could have a big effect on the stock price. For example, if Tesla's Chinese facility can boost weekly production volumes for its cars, it might hit incredible milestones thanks to price reductions and greater production. Tesla's Shanghai Gigafactory delivered a record number of vehicles in November. Therefore, if the production rate rises, Tesla may achieve record delivery numbers with another price reduction this year. Black is frequently linked to the belief that Tesla stock is cheap and has been a fervent advocate of the company's price. Black noted that the shares were being sold at a discount in 2022, when the stock was trading at a 2-year low. Following Musk's completion of his agreement to purchase Twitter in late October of 2022, the market value of Tesla stock fell by approximately $125 billion. The price of Tesla stock has been steadily declining since Elon Musk's Twitter deal. Nevertheless, even though he had voiced concerns about the Tesla president's dedication to his new business, Gary Black remained optimistic about the stock. According to Black, it would appear that Tesla stock is suffering unless Musk decides to resign as president of Twitter. Musk cannot sell more Tesla shares until fourth quarter profits are announced in January, he said, in order for the stock price to rebound from the decline. According to Gary Black, Tesla may soon be able to give up ownership of the social media platform if a new president is chosen for Twitter rather than Musk. Investor fears caused the automaker's stock price to fluctuate between a few spikes and sporadic declines in 2022. Musk has sold a number of Tesla shares as a result of this new endeavor, which has also taken up some of his time and left him with less time to devote to Tesla. Gary Black expressed his surprise in a series of tweets that Elon Musk, who devoted most of his time to Twitter rather than Tesla, was still in charge of the company's board of directors after his argument. He went on to say that he thought Tesla executives will eventually pressure Musk to step down as president or face legal action for failing to act in the company's best interests. Black mentioned a $10 billion share repurchase in the first quarter of the year, the debut of the Cybertruck, the widespread deployment of Tesla's FSD version 11, and the development of a cheap electric vehicle in 2023 as potential near-term increases for the company's stock price in a previous tweet. Other potential catalysts for Tesla shares, he continued, include the building of multiple more gigafactories and the hiring of a capable new CEO for Twitter. According to Gary Black, Tesla is in a strong position to grow its earnings in the future. He previously concurred with American investor Ron Barron's prediction that Tesla would sell 20 million cars at a 30% operating profit and an average selling price of $50. This would yield $300 billion in operating income, according to Barron, and a 15 times P/E ratio would translate into a valuation of $4.5 trillion. Ron Barron does not include batteries, robots, Tesla's robo-taxi, or anything other than electric cars, although investors should be encouraged by Gary Black's comments regarding the downturn. It's crucial to remember that other analysts, in contrast to Black, have differing views on the slump and its implications for the economy. Catherine Foddy of Wedbush stated last year that she believes Tesla stock is just going to decline due to mounting economic concerns and a possible slowdown this year. Along with Tesla's recent price reductions, she continued, a number of regional economic indications point to a softer global supply-demand dynamic for the business. She stated that she anticipates 2023 to be a challenging year for the industry. She notes that severe supply and inflation challenges are accompanied with her decreasing demand projection, and that since Tesla is no longer a niche player, it will begin to experience cyclicality like other manufacturers. Some investors think that as high inflation and rising loan rates discourage consumers who are reluctant to spend money on expensive goods, the company's prospects are likely to deteriorate, and that demand for its EVs may decline. But it's important to keep the basics in mind here. Demand for Tesla is undoubtedly increasing, and this will have a long-term impact. Musk recently stated that Tesla intends to grow its Gigafactory network, as the Business Ibs proposed that Tesla would benefit if Musk shared fewer political observations on Twitter. ***9*** create a comprehensive strategy for Twitter. According to Ives, there is currently concern that Twitter is losing money quickly and that advertisers are quitting, which could result in further losses and Musk perhaps selling more Tesla stock. He went on to say that they may outline Twitter's 3-year plan if a new chief is installed. In a meeting with Tesla and Twitter staff during Musk's first days there, the president disclosed that the company needs to have space to generate income and then make more money than it spends in order to develop to a high degree. Without this, he continued, there may be a significant negative income, which might lead to bankruptcy. One could argue that Tesla is not completely safe and that the president may continue to pay less attention to and be more dedicated to his new business given Musk's commitment to increasing income. What do you think of Dan Ives' comment regarding this? Tell us below. Additionally, keep in mind that you can click on the next movie that appears on your screen to learn more about what Tesla has been up to in recent days. I'll see you there.